Good afternoon. This is Keith Brown with Commodity Consulting with some cash commodity commentary for Monday. We're starting a new day, new quarter, new week. That's real good. And it's a hot July for most of the country, and that certainly has been driving our prices. And I guess that's really the news story. We had record high temperatures in many places over in this country over the weekend. Matter of fact, we were privileged to be in Atlanta over the weekend when it made its all-time forever and ever amen high of 109 Fahrenheit. That was pretty sweltering, I'd say. At any rate, let's get on to the markets. December cotton closed much better today, over 72 cents, 72.02, up 70. I think that's partly driven by the euphoria out of Europe and as well as from the Chicago grains. And of course, it's hot and dry in many areas of the cotton belt, particularly in West Texas and in the Delta. Unfortunately, cotton is driven by excess supply as opposed to production problems, but a production problem here or there is not going to hurt, obviously. We're sort of in this little time window also that the market may try to trade a little higher up into July, but we don't want to lose sight of the fact that unless the supply numbers dynamically change and immediately change, we're still in a bear market, and that's the way we're going to see it for right now. Corn, of course, losing yield every day. We were sharply higher. September contract up 23 cents, closing above 650. Matter of fact, going out 652. We did see the spot July market come up and take out the 685 high made by the expiring May contract earlier this year. So very muscled up corn market, and if there is no weather, no particular rain that's coming in, and of course we're gonna have a break in the middle of the week for the 4th of July, and so there'll be a lot of anxiety about that. But a pretty good closing corn today. And of course, it looks like corn goes higher. Why not? Wheat certainly trailed along with corn today, closing 754 at 15 cents. That's pretty impressive to us. Beans also 14.38 up 10 cents. There's still time to get some rain on the bean crop and salvage it, I suppose. But every day that goes by that we don't get that rain, I think these grain markets get steeper and deeper into trouble. Heating oil markets sharply lower today. We had a big rally, as you know, on Friday, and we actually called that rally, but we're down $3.40 today in July heating oil as the dollar was very strong. We still have trouble in Europe. That's not going to go away, even though they're trying to fine-tune the problem over there a little bit. So we'll see how the markets do trade tonight and into tomorrow. It's going to be something of a very erratic holiday trade that we need to be cognizant of, but the trend of the grain still has to be considered higher, and the trouble with cotton and fuel, I guess, remains lower. We were told, we haven't seen it, we were told there was a Wall Street Journal article today that detailed the overabundance of cotton and copper and crude oil. So the 3 C's, I guess we got plenty of those, and the market certainly bore that out today. Any questions or comments, of course, give us a call at 1-800-910-1910. Thanks for listening.